Over the past few days, global markets have been rattled by a massive sell off in software and data stocks, wiping out nearly $300 billion in value. And at the heart of this reaction is a growing concern. If artificial intelligence can now do the work instead of just helping us do it, what happens to the entire software industry built on subscriptions? Is this just another wave of tech market anxiety, or are we witnessing a deeper structural shift in how digital services are created, priced, and consumed? To unpack what this means for businesses, investors, and even the global workforce, I am joined by my co host Bilal Moon. Bilal, great to have you. So, Bilal,
Thank you.
are we looking at another tech cycle or a genuine turning point in how software exists?
I think it's definitely a turning point. And although we had a massive correction in some of these software stocks in January, but there has been a gradual decline over the last 6 months or so in a lot of these stocks across global markets, right? But what really caused, this trigger earlier this year was Anthropic launching Cowork, where it allows its cloud model agents to coexist in a shared working space where the agents could assign each other tasks to do. And that really had a massive ripple effect all over the tech space, where people started testing it and realized that a lot of basic project management work or basic tasks could be left to the agent, right? And then, after just a few days, we saw major tech companies working in the software space announcing that, job freezes or junior hiring would not be done in the short term, citing that AI is driving operational savings out there. And we also had Dario Amodei publish his article, which is quite making the rounds as well, called "The Adolescence of Technology," signaling that AI could become a super nation of workers, right? So it was a perfect storm building up, where people were, anxious getting into the new year on the back of all the AI developments last year, and this just crept up in January, and it had an impact across all. Not all software stocks, but a majority of them.
But Bilal, why did markets react so sharply if AI disruption has been discussed for years?
It's a I think if you put it into context, the S&P did not really make a very big correction. In fact, the equal weighted S&P was still up for the week. It was just the software stock stack, right, which constitutes about 8 or 9% of the S&P, which was down, including, with the heavy weight of Microsoft out there. One thing to point here is that a lot of these software companies, apart from Microsoft, the Salesforce, the ServiceNow, and Atlassian, and then there is other Asanas and all these project management company, Monday.com, which were being used across the board by many organizations. They were trading at many years of their free cash flow multiples, right? Which means that investors were able to say that we can predict 30 years of a cash flow for these particular companies, because they are being used by 150,000, 200,000 large organizations out there. But with the progress of AI, now investors are thinking that, yeah, these companies are still able to do well, but we're not sure that we can predict their cash flows for the next 30 or 40 years, right? We can only see probably 10 to 15 years. So these software companies were already trading at perky valuations out there. So it's not that they're not great companies anymore. It's not that they've lost the moat or their business model has suddenly evaporated. It's just that the visibility from the investors is not out there. for the investors is not out there, that they what can these companies be doing in the next 30 years, because AI is progressing so fast.
Over the past decade, most tech companies have relied on the SaaS model. So, Bilal, if AI is delivering outcomes instead of just tools, does the SaaS subscription model start to break down?
Well, it depends to be it seen, right? I don't think one can say that SaaS is broken. Yes, the enterprise software, the large software, which have done extremely well over the past 2 decades, might be shifting towards a different model where they could charge per like right now, most of these companies charge per seat, right? Now the business model might shift to charge per the action, or charge per usage, right? So I think it'll morph into something else, but it's too early to say that SaaS is gone. I think market usually overreacts first, and then we get to a mean reversion, right? Because a lot of these companies are multi-billion dollar companies, and they have smart people working for them as well, right? So they'll be able to figure out how to navigate through these, and we'll have new winners coming out of this wave as well.
Right. So, looking at that history, have we seen similar panic during past tech transitions like cloud computing, or is the AI reaction something entirely different? I think,
Well,
yeah.
we always have these reactions in the market. Last year, I remember during late January and Feb, we had the DeepSeek moment where a lot of these hardware stocks, especially Nvidia and chip makers, declined substantially over a period of 2, 3 days, because there was this view that DeepSeek could run with a lower end of Nvidia GPUs, but fast forward 12 months, all these hardware stocks are considerably up, and the demand for AI, or the demand for these hardware or semiconductors has not gone anywhere, except being up multifolds in the last 6 months or so. So there is always an overreaction from the market, and history does tell us that it happens regularly. But this software decline has been gradual over the last 6 to 8 months. It seems that it might have that sense that the multiples might remain at lower levels for the next few years. It's just that these companies are still doing really well. The market is not now willing to give them a higher growth multiple, or a higher free cash flow multiple, because the visibility in terms of growth is less.
So here's something I keep thinking about. If AI starts doing a lot of the work that used to need software and human input, what happens to countries that rely heavily on outsourcing, like India and Pakistan? Are we looking at a big hit to jobs and freelance income there?
It's a good question, and simple answer would be that the AI agents would have some impact on outsourcing and a lot of these low-paying jobs out there. And as they say, the proof is in the pudding, right? So if you look at all these, I'll start with the Indian tech sector. The Infosys, the Wipros, the TCS of the world, which employ millions of people in terms of their outsourcing jobs, right? And they are the backbone of a lot of tech companies in the world. If you look at their stocks performance, I think they are all roughly down 20%. And it's not that the companies are not good. The companies are growing. The companies are still posting healthy profit. It's just that the market has discounted their multiples significantly out there. I think just last week only, I think Spotify co-CEO said that their senior software team has not written a single line of code. They've only used AI to write code out there. So, a lot of these tech giants who have back offices in South Asia or in Asia in general part, right, will be looking at in terms of what tasks they can let the agents do, and if these agents are able to do it without any hiccups, then yes, I think a lot of these outsourcing jobs could face some problems. In Pakistan, we do not have a lot of listed companies, in this space, right? We have Systems Limited, which saw some correction. There was a foreign selling in this stock last week, but nothing significant. The stock is still down this year, but it's not significantly down. So, and the company I think has diversified its revenues over the last couple of years into other services as well to give them a cushion. But and as I said that it has been on an historically average been trading at 30 times price to earnings, and as we've seen across the border in India that the multiples have contracted to 20 times price to earnings. So I would say that it would just be a multiple contraction initially till investors figure out if the viability of the business is good, and the company can take advantage of the AI wave and grow and get back to growing.
Right. So then what about the big software companies? Can they adapt fast enough, or are AI native startups going to overtake them?
Well, it's very difficult to bet against all these hyperscalers, the Microsofts, the Metas, the Googles, or the Amazons of the world, right? So because they have a lot of capability, they're spending billions of dollars. I think all these big hyperscalers have announced over $600 billion, $650 billion in capital expenditure in the next 1 year or so, because they want to get into this AI race. So they're spending a lot of money out there. So of course they have the liquidity. They can buy growth as well, and they have some the smartest people working from them. So it's very hard to bet against them, and they've gotten so big that if they see any kind of competition from startups or any kind of private company, they can just go and outright buy them as well. We have an example of Meta where they've been spending crazy amount in recruiting talent, paying millions of dollars in signing bonuses and salaries as well, just to get the best AI talent out there. So these companies won't give in without a fight, and it's very hard to bet against them because now they've gotten so huge, and they have so much capital or liquidity with them that you know they'll always be in the running to save their business model.
So I'm a bit curious here. Who's really going to benefit from all of this? Like startups, chip makers, or the companies that actually own the AI's infrastructure?
Well, currently, the biggest beneficiaries have been hardware or chip manufacturers, semiconductors, memory companies building up cooling for these data centers out there, the optical cables out there, the companies providing copper wiring and power generators. I think power generators and machinery for these data center excavation has now almost 100 to 144 week time lag out there. And so it's not running into the lag or the delay is not in weeks, it's in years now, just to get hold of any kind of power generators and machinery, right? So there is significant demand for these for these products right now. So for now, the initially, because as per a lot of these CEOs out there who've said that this is going to be the biggest uh, build out in human race history, and it could be compared to post World War home building, which we saw in the West. uh, how how Europe and North America got built up in the 50s and the 60s, right? So and they're spending trillions of dollars out there, and estimates are going up by the day. So for now, the hardware is the winner, or whoever is providing physical structure. Uh, After that, it's hard to say right now that who might win the AI race. The end goal would be that productivity will go up and you will be able to do a lot of things which we are now seeing with this AI Claude co-work, that which the stuff which could take days can now be done within hours with these AI agents now. And the knowledge workers will need to find other work to do as well, just to pass time, because it is building up basic financial models, it is doing basic graphic work, it is building basic websites. So we're living in a very interesting time right now, and the world could be very different to what it is in the next 6 months.
So, if we talk about the next 6 months, what should investors and workers watch over to see if this disruption is real?
Well, I think you I would say that you'll have to watch everything, because at the pace at which this AI wave is moving, I don't think you can skip a beat. I think now that Anthropic Claude has come out with Claude Cowork, I think all eyes are on what the response is going to be from Google with its upcoming Gemini models, and how OpenAI with ChatGPT would respond to it, because there's another startup called OpenClaw, and I think
Yeah.
I was looking at it in terms of its adoption rate. Its adoption rate is like way faster than even the internet, the Android, the App Store, and so the application layer being built on a lot of these things is absolutely off the charts right now, and we are seeing different products being released every other day. Just I think a couple of days ago, some platform announced in the US a a financial services agent which helps out with tax planning and stuff. We saw some of the very safe stocks in this financial services sector, like Charles Schwab and I think Raymond James, go down instantly, because investors use these services for a lot of this stuff. But again, that comes under the regulated aspect of business. So I'm not sure that how quickly that part would be disrupted, where there is a lot of regulation and where there are legal implications out there. But in terms of basic, contract review, basic compliance, analysis, reporting, lead qualification, campaign management, or customer support, ticket routing, these are the ones which initially are thought to be disrupted or being taken over by agents in this year. I think almost like one third of Airbnb queries are now handled by AI or the agents, and their query resolution has gone up significantly. So that is where the trend is going on, and it's going for the lower end of the work, where query resolution or ticket. And then this is where a lot of labor or the workers from South Asia are employed, right? Where ticket and query resolution and customer service. So this is the area where companies are going first in terms of their AI agents. So I think we'll see some big headlines coming out this year in terms of how the sector might impact these outsourcing jobs.
So, this may turn out to be a temporary correction or the early signal of a major transition in how digital value is delivered. We'll be watching closely. Bilal, thank you so much for the conversation and thank you so much for tuning in.